Hilton raising its forecast after beating estimates for the third quarter, boosted by higher demand for travel. The company saw its average revenue per room top 2019 levels for the first time since the pandemic began. That travel and leisure space is where we find Sozzi Steak today.
Yeah, this is where I am in an effort to get or touch more tickers on these crazy earnings days. My take is about Hilton. So I went through the quarter, get some things I liked and what I didn't like. Let's start with things I liked on these Hilton results. First up, operating and net profits above the high end of Hilton's guidance, check done. Good thing indeed. Earnings beat estimates, check done. Certainly like that. RevPAR exceeded the third quarter of 2019 levels. RevPAR, key industry metric for the hotel industry, stands for revenue per available room. Gives you a good sense on demand, but also the price increases that a Hilton is or could be trying to push through. Next up, share repurchases. Hilton started to become more aggressive in its share repurchases in the second quarter. They continued to be aggressive here in the third quarter. That is a good thing. Also, occupancy up in all countries, which I'm a little surprised about, given we've seen challenges, of course, in China. Europe is, in many respects, in a recession, but occupancy up in all areas of Hilton's business around the world. A couple things I didn't like: cautious EPS guidance for the holiday quarter. The holiday season, of course, a big travel season. I think it's that cautious guidance, a little bit below consensus in terms of EPS. That's why the stock is not popping, I think, on these results. Also, RevPAR, again, revenue per available room, growth slowdown seen for the holiday quarter versus the third quarter. Now, RevPAR is still seen up 19% to 23% in the fourth quarter, but a little bit of a tick down in growth rate.
So that's good news for us.
That's good. Might be good news for
people who want to go away and stay
or
in rooms.
shoppers. Indeed, Julie, that's an astute observation. It's good to have you back here today. Now, we just talked to Hilton CEO Chris Nassetta about just the overall demand backdrop in leisure. This was at our All Market Summit. Take a listen.
We've seen very, very steady recovery. So I would say we're at the beginning of what I think is going to be a new golden age of travel.
Oh, that's quite a headline. Golden age of travel, according to Chris Nassetta. I liked it, but again, investors not necessarily liking that guidance out of Hilton this morning. My take, fascinating to see investors ignore a comeback quarter for travel companies. If you go into Yahoo Finance and do wow, that's one thing I don't do is sleep. But anyway, if you pull up a comparison chart on Yahoo Finance of Hilton, Marriott, a lot of these travel companies, Expedia, the airlines, a lot of these companies reported good quarters, and the stocks have gone nowhere. It's as if the market is just bracing for this major slowdown and a recession this year, and they're just so focused on what may or may not happen next year.
Yeah, the demand in that golden age of travel is what all of the companies, whether it's airlines, whether it is a stay or accommodation brand like a Hilton, what all of them have discussed. And I think particularly it's the investment in adding on to their capacity that they've also talked about. That's going to be a considerable type of investment that they have to make back into their own operations too, whether it's airlines adding on more route capacity or even more planes in the future too, or if it's a company like Hilton, they've got 416,000 rooms that they're trying to bring online too.
Yeah, look, I think this quarter from Hilton ultimately suggests that we'll get some good results at a Marriott when they report in a couple days as well, maybe even an Airbnb, but it'll be interesting to see if these results start to get embraced by the market.
Yeah, we shall see.